All right, good morning. It is Monday, October the 20th, 2025. Hope everyone had a nice weekend. My wife was actually out of town this weekend, meaning daddy daycare. Yours truly taking care of three children at home, which I don't do a lot by myself, almost never. So I don't know, I'd call it a success. We had a lot of fun. We did not have any urgent care or ER visits. Just still trying to pull some splinters out of my one son's hand. He did, kind of fall into a wood pile. But I'm going to call that a win if that's all we're dealing with, trying to pull out splinters on this Monday morning. So good time for our family. Obviously a beautiful weekend here in Charleston. I love fall. Just a great time of year. So, all right. Last week, relatively quiet week for most global financial markets. So I thought this would be a good opportunity to touch on gold. All right, so gold really making headlines here in recent months. Does it make sense to own gold in an investment portfolio or own physical gold for that matter? Full disclosure, some of you are aware in more conservative strategies that we help with here at the office. We've always owned a small allocation to gold. Really just for diversification purposes, just having a separate asset class, aside from stocks and bonds and things like that. All right, and gold has had a really, really strong 2025. All right, so up, roughly 50%. Really, really strong 2025. Now there are a few challenges with gold. Okay, the first being that I thought I'd bring up, gold can go very long periods without making any money. All right, so just a couple examples. If you look back to, so from the time period 1979 all the way to 2009, all right, 1979 all the way to 2009, gold was flat. Okay, no gains for many, many decades. All right, and then it had, a nice little rally, kind of 2009 to 11, and then again from 2011 all the way to last year. All right, so that's another well over a decade. Again, gold made no money. Down for a good stretch of that, came back, so it was breaking even after a decade, over a decade. So point being, if you're gonna own gold, you have to go into it knowing you very well might go 2 or 3 decades without making any money. Right, and that kind of ties into the second point because it's a non-cash flow producing asset. Determining what's the fair value, what should the price of gold be at any given time, can be really difficult. Right, 'cause it's a non-cash flow producing asset. There are some really, really smart people that don't like gold. Warren Buffett maybe being maybe one of the more outspoken critics of gold. Yeah, he's mentioned a number of times. I think his quote is, I can guarantee you if you own an ounce of gold today, 100 years from now, you'll still own 1 ounce of gold, right? So just meaning because it's not a cash flow producing asset, because it's not like real estate where you can receive rental receipts, or stocks where you receive dividends, or bonds where you receive interest, it doesn't produce cash flow. Which is why he doesn't like it, and some others. Okay, another interesting observation, and we actually hosted a webinar on this. So I think there's a link right below the video here. You can go watch some educational webinars that we've done over the years. I want to say I think we probably hosted the one on gold maybe 4 or 5 years ago. So it's definitely in the archives on our website under educational material, but it's really, really interesting. So if you actually look at, what's the long-term expected return on gold? Well, in the very long term, it equals inflation. Okay, long-term expected return equals inflation. To the point, and this is so neat. When measured in gold, all right, the wages of a Roman centurion, like way back 2,000 years ago. When measured in gold, it's about the same wage as what today's military personnel gets paid, which I found quite fascinating. So point being, gold kind of equals that long-term return equals inflation. However, it's obviously very, very volatile, right? Because you can go 2 or 3 or 4 decades without earning anything, and then you can have a sharp rally in a year or two, right? So more recently, obviously there's a number of tailwinds right now, which is, I would argue, is all priced in. It's kind of what's driven the return here in the recent months. But inflation, trade wars, deficits, people thinking the Fed will continue to cut rates, right? Which, again, I would argue that's all priced in. You have other central banks outside of the United States, buying gold. That's obviously helped it. So I don't know. Should you be buying more gold, today here at these prices? I would argue probably not. I can tell you personally, I'm not. But it's hard to say. That's what makes markets, and with many asset classes, anytime you have that kind of momentum, like it can certainly run for a bit, and it's hard to say when that next point's going to be where it doesn't earn anything for another decade. So I don't know, just thought might be worth sharing those thoughts on this Monday morning. But questions, comments, concerns, please don't hesitate to reach out to our team, and we hope you have a wonderful week and enjoy this beautiful fall season. We'll talk to you soon.